I'm the Senior Managing Partner and Portfolio Manager of Sabadell Capital Investments. I also run Turner Trends. I'm a registered investment advisor. And there's my background. I'm a civil engineer. Most of my professional life has been in the development of enterprise-level software systems, which has helped me a lot in the development of the tools that I use in looking at the market. Okay, here's some market truisms. Profits matter more than opinions. You will get a lot of opinions out there. You'll get some in here. What really matters are profits, not the opinions. Buy and hold is the same thing as buy and hope. Hope is an awful investment strategy. The best investor is an agnostic investor, and I'm not talking about religion. I'm talking about falling in love with, getting married to a stock. Okay? Here's one you won't see very often. When's the last time you've heard a financial advisor say to you, every trade I put on, I assume is going to move against me? Okay? You don't hear that said very often. That's the way I go into every trade. I assume it will move against me. Okay? And I take precautions for that. Sometimes the most profitable trade you can make is getting out with a small loss. I guarantee you that most of you would have loved to have taken a small loss in May of 2008 instead of hanging on and hanging on and hanging on and assuming that it was going to turn around at some point. Some of you even went out and bought more shares as it went down. Some of you bought more shares this year saying, I can make it back up because the fundamentals are still good. Okay. Here's one. You hear the opposite of this pitched almost every night on TV. How the market is wrong. Let me tell you, the market is never wrong. If you're not making money in the market, it's because you're wrong. It doesn't matter what your ego is telling you. There are no undiscovered stocks. Quit looking for them. Quit waiting for that little psst in your ear of saying, hey, this is a great stock. Here's one that Wall Street has missed. Wall Street doesn't miss anything. The best buy strategy is a smart sell strategy. And you've heard this, I already said this, and having a long-term investment strategy is great. 1 week at a time. Following technicals is good. Following fundamentals is good. Following both is best. It's never wrong to take a profit. And cash is always king. Okay? Now, here's what I do in my investing. I hope for the best and I plan for the worst. The playing field is changing. The U.S. government, and I've got a talk I have, I think it's Sunday, where it's how to make money in the market in spite of Washington. And I'm trying to do that without taking a political position. I feel like that I've been set down on a fence really hard. Okay. Anyway, enough of that. Risk has become underwritten by the U.S. government, and that is a bad thing for us. Okay? Us being investors. I assume we're all investors. Maybe I should ask this question because sometimes I'm surprised. Is there anyone in here that wants to invest in the stock market to lose money? Okay? So if you want to be in the stock market, I'm assuming that you're in it for one purpose only, and that's to make money in the stock market. Anybody not have that as a goal? Okay. Now, that was a trick question because a little bit later I'm going to ask that in another way, and let's see how you answer it. So remember that. All right. Will inflation skyrocket? Will the U.S. dollar collapse? Will gold soon be trading at $2,000 an ounce? All these things we would like to know, wouldn't we? All right, here's what it takes. A solid investment strategy, the right kind of tools, and discipline. Now, I'm a little worried about discipline. I'm going to give you a little personal story. You probably can't tell by looking at me, but I'm 80 pounds overweight. All right? Well, I've been overweight most of my life. I don't like being overweight. It takes a lot of discipline for me because I like to eat, obviously. But I'm starting a new plan next Wednesday. Now, wait a minute. That's true. It's next Wednesday. It really is. Next Wednesday. Okay? And they have told me that I'm going to be able to lose my 80 pounds in a very short period of time. I like the short period of time part, and I like the 80 pounds part. And they've been telling me what I'm going to have to do from a discipline standpoint to make that happen. That's the hard part. Let me tell you about investing in the stock market. It's the same kind of thing. You've got to have the discipline to stick to the processes that you're going to put in place. I am a rules-based investor. If you will have rules making your decisions for you instead of your emotions, you will be far richer in the long run. You can go out there. I heard someone just a few minutes ago that was kind of echoing through the doors there about, here's the top stock. Here's the one to buy now. That's not what you want to hear, with all due respect. That's not what you want to hear. What you want to hear is, when I own something and I'm making money in it, when do I get out? And when I own something and I'm losing money in it, when do I get out? Because that's what you don't know. I talk to too many of you. I talk to thousands of you every year. And by and large, you don't know when to get out. This is going to show you how to do it. It's based on rules. So in this session, we're going to go over the 10 rules for beating the market, the best tools for this market, and the kinds of results you should expect. Okay, rule number 1, think like a fundamentalist. I believe in fundamentals. When performance comes out on, when news comes out on a company, look at what drives the stock higher or lower. It's based upon the performance of that company, the amount of change, the momentum of change, the percent of change. I'll give you an example. I've got two companies here, A and B. Last year, Company A had a 10% rate of earnings. Best in its peer group. Company B had a 1%, near the bottom of their peer group. Okay? This year, Company A knocked it out of the park again. 10% again, best in their peer group. Company B, they did a little better. They're still near the bottom. They only did 1.5% their earnings. Which is the better company to own? How many think A? Come on now, this is audience participation. How many of you think B? It is not a trick question. This gentleman up here already is skeptical about what I'm saying. Is he always skeptical? Good for him. You should be. It is Company B. Why? What was the percent growth of Company A? 0. What was the percent growth of Company B? 50%. Now, Company A is a far better company than Company B as far as its fundamentals are concerned. But you don't buy a company because of what they have done. It's what they are doing. And investors will pay more for growth. Growth means that price is going to go higher.